Hi, this is PR Sundar. Welcome to this special episode where I'm going to talk about the impact of this Hindenburg report on Indian stock market. So first let us see what they said. Hindenburg said, we are taking short positions in ADANI group companies through US traded bonds. Then number 2, we are taking short position through non-Indian traded derivatives. Non-Indian traded derivatives. And number 3, we are taking short position with non-Indian traded reference securities. So they mentioned 3 things. 1, we are taking short position in bonds. Number 2, we are taking short position in non-Indian traded derivatives. And number 3, we are taking short position in non-Indian traded reference securities. So that day I also told you I was not very clear about all these things, but now I have analyzed, now I got to know what they mean. So let us go one by one. The first thing is that they are taking short position through bonds. Adani seems to have issued a lot of US dollar denominated bonds. So they are shorting it. Okay, the first question is that only in futures and options you can short sell. In cash market you cannot short sell. So the bonds are not traded in futures market. So then how come they are shorting the bonds? So what they are doing, they are already people who are holding the Adani bonds, they are paying some interest to them, they borrow that bonds and they sell it in the market. When they sell, they have to give delivery. So after certain time, so they have to buy back the same bonds and we'll have to give it to the owners, and to the owner they have to pay some interest. So there is a cost involved in borrowing the bond and selling it in the market. And also for the duration where you have sold the bond, let us say these people reverse the trade maybe after 6 months. For during these 6 months, they will not get the interest. So the interest eligibility will go to the buyer. So the person who lend the bonds to you, he will demand the interest plus interest on the bond plus some interest for lending it to you. So I heard that this total cost will work out to be around 10 to 11%. So somebody is paying 10 to 11% and then borrowing the bonds and shorting it, it doesn't make much sense, because bonds, how much it can depreciate. Yeah. So therefore their short selling through the bond may not be very, very significant. If you want to borrow the shares for short selling, it's very, very easy. But borrowing the bonds, illiquidity may be there. So it may not be that big, that liquid. So first thing they said, they are shorting through US traded bonds. May be true, but that may not be significant amount. Then why the shares are falling here? Forget about Adani shares. Why the entire market is falling? So the reason is very, very simple. Look at the second one. They have taken short position using non-Indian traded derivatives. So where Adani stocks are not being traded abroad, right? So Indian derivative but not traded in India. So that means that's only SGX Nifty. So that's the only derivative that is traded outside India. So probably they are taking some short position in SGX Nifty. But then again, that is not related to Adani. The third one, non-Indian traded reference securities. Here they are not talking about derivative, they are talking about securities. Non-Indian traded reference securities. That means what? The shares that are Indian shares that are being traded in US which are called American Depository Receipts, like ICICI Bank, HDFC Bank, and Infosys, Wipro, Tata Motors, Dr. Reddy. So these are the stocks that are being traded in US markets, which are called American Depository Receipts. So probably these people are shorting it. And very simple, when a big group like Adani Group falls, okay, the banks will have a larger exposure with them. So the banks will also fall. So naturally, these people must have taken some short position in ICICI Bank and HDFC Bank. Probably they have not taken any short position in Infosys and TCS. Of course, TCS is not traded in US market, only Infosys and Wipro. Probably they have not taken any short position. So that is the reason why for the last 2 days, the severe fall came in Adani Group of stocks and the banking stocks. But IT stocks did not fall. So basically, this Hindenburg people, they claim that they have taken short position. So they must have shorted Adani bonds, but which may not be a significant amount, but something like SGX Nifty or any other Indian exchange traded funds traded abroad, or American Depository Receipts of ICICI Bank and HDFC Bank. So that is why, I was just for fun, I put it, the collateral damage for banks seems to be more than the damage to the main damage to the Adani stocks. So it is time to be very careful, not only the Adani stocks and also the banking stocks and the overall market also. So my interpretation, I have discussed with you, my interpretation may be wrong. Maybe if you have a better interpretation, so you can comment in the comment section. So this is what I guess, so I am not very sure about all these things. So whatever it is time to be careful, especially when Adani has not revised Adani Enterprise FPO price band. So anyway, tomorrow it will be very, very interesting day. Hope you enjoyed watching this video. Thank you for watching.